Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Democracy is the theory that the common people know what they want and deserve to get it good and hard. Markets are forward-looking, which explains why they keep tripping over the present. Corporate strategy is often just confidence applied to incomplete information. The economy is resilient whenever no one wants to admit they're surprised. Wisdom is knowing when a strong opinion requires weak language.
This is geopolitics in risk on, risk off mode. The US talks tough. Iran looks weaker but dangerous. Israel wants action. Saudi Arabia wants influence without chaos. And Turkey sells diplomacy like a regional broker. Everyone fears war, yet everyone is positioning for it. That's a paradox. Deterrence talks loud, hedging gets louder. Markets aren't pricing a full conflict yet, just the optionality of one. When fear rises but capital does not flee, it usually means players expect bargaining before bombs. As David Frost said, diplomacy is the art of letting someone else have your way. That neat 4% Nifty correction is doing a lot of PR work. Under the hood, 92% of Nifty 500 stocks are down more than 5% from their highs. 2/3 are off over 20%, and nearly half are in full drawdown mode. This is not a gentle pause, it's a stock picker's bear market hiding behind a heavyweight index. When averages look calm but breadth collapses, the market is already voting, just very unevenly. This chart marks a regime change. Tech, especially AI-linked giants, now dominate global profitability. Not because revenues exploded, but because margins did. Alphabet, Apple, Microsoft and Nvidia are printing cash with software economics, while energy profits still ride the oil price roller coaster. Saudi Aramco proves energy can still win, but it needs geopolitics on its side. The real shift is this: capital now chases scalable tech intelligence and not just scarce resources. This chart shows a quiet but powerful shift. Over half of homes sold in India's top cities are now priced above 1.5 crores, double the share from a decade ago. Affordable housing did not vanish, it just stopped driving volumes. Rising incomes, dual earners, easier credit, and aspirational upgrades are pulling demand up the price curve. Developers followed the money, not the policy slogans. India's housing story is no longer about shelter, it's about balance sheets. India's cloud story is scaling fast. Data center capacity is up 4-fold since 2019. But physics is tapping the brakes. Most of this growth sits in Bombay and Chennai, exactly where water stress is already severe. Add to that power demand set to triple by 2030, and suddenly cloud isn't just a tech problem, it's a utilities problem. Policy incentives worked, now infra reality shows up. Without water efficient cooling, cleaner power and geographic spread, India's cloud push risks overheating, literally. Zoom in on India here, and the contrast is stark. India spends about $75 to $80 billion on R&D, respectable in absolute terms, but tiny relative to its size, ambitions, and demographic advantage. China and the US are running an innovation marathon. India is still warming up. The issue isn't talent. India has plenty. It's scale, private sector depth, and consistency of funding. Until R&D becomes an investment priority rather than a policy slogan, India will keep exporting brains instead of breakthroughs.